Hello, today we are going to solve Jan 2025 paper. Question number 4. Bitani buys and sells goods on credit. The following information is available on the year 20 for the year 2024. Balances are given, okay, and some additional information is given. So this represents the opening inventory and this represents the closing inventory. And then we have state. So the first question is, okay, question number A. State four possible aspects of social accounting to be considered when making business decision. So social accounting versus ethical accounting is one of the units. So social accounting includes, okay, employee motivation. If you include, it's a social accounting. Then environmental effect on the employee. For example, are you that is that if you consider that, then it is social accounting. Then environmental benefit to the society. If you are considering sustainability of using resources in the business production, then you are taking the aspect of social accounting. Then calculate two decimal places the gross profit as a percentage of revenue. So the formula is gross profit by revenue times 100. So let's calculate the gross profit. So here we have the gross profit is equal to gross profit, okay, will be equal to 350,000 revenue, okay, minus cost of sales 190,000, the whole divided by, okay, the whole divided by revenue times 100. So the revenue is 350,000. So 350,000 times 100, that is equal to 45. So this is equal to 16,000. Okay, here if you write 35 minus 19,000, okay, 190,000, that will be equal to 160,000 divided by 350,000. So that is equal to 45 times 100. You have to do times 100. So that is equal to 45.71 percentage. So which can be approximately equal to 46 percentage. Then we have percentage return on capital employed. This is nothing but revenue by capital employed times 100. So let's see what is the revenue. So the revenue, okay, the percentage return, sorry, the profit before, sorry, so the profit before the interest, profit before interest by capital employed times 100. So what was the profit, net profit before interest? Okay, so the profit before interest will calculate profit before interest, okay, will be equal to revenue. Okay, we had the gross profit, okay, the gross profit you can take from there only, okay, say 160,000 minus the expenses, okay, 155,000 minus we have to exclude the bank loan. The bank loan interest is 10% bank loan, so 10% on 40,000. So 10% on 40,000. So 10% on 40,000. So that is equal to divided by capital employed. So the capital employed is equal to capital plus non-current liability. So capital employed, so capital is 75,000 plus the non-current liability was 40,000. So he's also saying that 10% bank loan was taken out in 2022 and it is repayable full in 2027. Okay, so this is one of the long-term non-current liabilities. So 75,000 plus 40,000. Okay, that will be equal to 115,000. So times 100. So that is equal to, so 10% bank loan, okay, that is 4,000. So 155,000 minus 4,000, 151,000, okay, minus the 160,000, that's 9,000. So 9,000 divided by 100, and so 9,000 so 115,000 times 100, that is equal to 7.83 percentage. Then we have the current ratio. So the current assets versus current liabilities times 100. So what are the current assets? Current assets are inventory, trade payables and bank. Okay. So let's add up all this. So inventory, so inventory 16,000. Okay, 16,000 plus trade receivables 39,000 plus bank 18,000, okay, divided by current liabilities. The current liability is 20,000 times 100, so that is equal to 18 plus 39 plus 16, so that is equal to 73,000. So it will come as 73,000 divided by 20,000 times 3.65, 3.65, okay, is to 1. Okay, that will be the ratio. So 18,000 plus 39,000, which is equal to 57,000. Okay, and divided by the current liability, which is 20,000 times 100, that is equal to 2. That is equal to 2.85 is to 1. And then trade payables payment period. Okay, so let's calculate the trade payables. trade payables by credit purchases. So 20,000 divided by the credit purchases that happened was, so let's calculate the credit purchase. So we have opening inventory. Opening inventory is 16,000 plus purchases minus closing inventory. Okay, the closing inventory was 22,000. So that was equal to the cost of sales. So here that is equal to 190,000. Okay, so from that we need only the credit purchases. So that times 365. So that should be equal to 20,000. That should be equal to, so 20,000 divided by 19 minus 190,000 minus 16,000 plus 22,000, that is equal to, so that is equal to, so 6 opening inventory plus purchases minus any closing inventory should be equal to the cost of sales. So 190,000, okay, minus 16,000, then plus 22,000, 196,000. Okay, so let's write that 196,000 times 365, that is equal to I'm sorry, here this is closing and this is opening, so 116 and this is 20. So let's calculate the credit purchases. So 190,000, okay, minus 22,000 plus 16,000, that is 184,000. So 20,000 by 184,000 times 365, that is equal to 39.67 days. Okay, then we have state from the ratios calculate two positive points. We can say that